Good afternoon. This is Oliver Slope, BlueLine Futures. Today is Thursday, July 11th. We just closed up in the grain and livestock markets, and it was certainly a little bit better of a day for both of those relative to what we saw in the first half of the week. Before we get into today's price action and charts, do want to remind you, if you have not signed up for a free trial of our daily commodity commentary, head over to BlueLineFutures.com. From there, you select the sign up button and select the markets that you want to read about each and every day. We've got a great team in-house that puts that content out. If you're newer to futures and options and they're just looking for a little bit more educational information, we've got a great educational platform here. Select the education drop-down. Head straight over to the university is what I'd recommend. We've got anything from introduction to futures all the way down to kind of hedging with grain and hedging with livestock futures and options as well. If you're interested in other markets like interest rates, metals, Bitcoin, etc., a lot of great information there as well. So again, check it out, BlueLineFutures.com. Now that we got that out of the way, we can jump right into the charts. Now, as mentioned, it was a slightly better day in the grain complex than what we saw in the first half of the week. We saw December corn trading up into our kind of pivot pocket, which we've outlined in our daily commodity commentaries, 412 to 413. And as you can see here on the chart, we've got a 4-hour chart. This has been, an inflection point. The bulls really want to get back out above here to spur some additional short covering to propel prices maybe upwards towards that 420 level. But again, this 412 to 413, this was the low from the quarterly stocks report. The breakdown point here on July 8th, and then has been resistant since then. So again, we want to see a closeout above there to spur additional short covering. Until then, it's just kind of a ho-hum sideways trade. Now, weekly export sales for corn this morning came in at 538,000 metric tons. That was up 51% from the previous week, but down 13% from the prior 4-week average. New crop sales, that came in at 116,000 metric tons, which was at the lower end of expectations. So maybe that was kind of muted the strength that we saw through the bulk of the overnight price action. Now, moving over to the soybean chart, again, we're going to zoom in here on the 4-hour chart. I think it just gives you a little bit better representation of where we're trading through today and the early morning trade. So you can see these big red bars are right at the 8:30 open. So you get a little bit of strength in the overnight trade, and then they just slam it on the open through the bulk of the trading session. Again, the fact that we haven't really gotten any significant rise in demand is still a dark cloud over this market. This morning's export sales for soybeans, again, very lackluster. It came in at 208,000 metric tons. That was down 9% from the previous week and 40% from the 4-week average. And net sales for new crop came in at 191,000, which was in line with expectations. But again, nothing really to write home about. Now, from the technical perspective on the soybean chart, typically we like to look for previous interaction between buyers and sellers to really give us points of support and resistance. But with the market basically here at new lows, there isn't that previous interaction to go off. So it becomes more of a momentum trade and money flow situation. So you want to kind of see the market stabilize and potentially buy on strength if you're looking to be long the market or to cover shorts. The bears obviously still in full control ahead of tomorrow's report, which does remind me, I'm not really expecting a whole lot in tomorrow's report, but we do have the expectations posted on the Facebook group Ag Chat, traders, hedgers, and producers, so you can go check out that. If you are not a member of that, go ahead, sign up. We post a lot of great content throughout the day, charts, fundamentals, estimates, reports, etc. Again, that's the Ag Chat Facebook group. So, all right, now moving over to the wheat market. The wheat market had a nice pop higher in the early morning trade yesterday. In our video, we talked about 550 to 560 as a potential value zone for the wheat market, and that looked to be pretty well, well played out in the overnight early morning trade with a nice bounce trading up near 580. However, following that 8:30 open, prices drifted mostly lower and finished the day kind of near the lower end of the regular trading hours range. So we're still upbeat that we can get a nice little pop from here, but the overall price action from 8:30 into the afternoon was somewhat disappointing. Weekly export sales over the previous 2 weeks were really strong. This week, not as strong, coming in at 240,000 metric tons, and that was just a hair below the low end of expectation. So a little bit of a cause for pause there on our recent optimism in the wheat market. Cattle futures, they were able to gain some ground today, but all in all, not a whole lot has changed on the technical landscape as we continue to kind of drift near and linger near the low end of trend line support. My concern continues to be that if we break and close below there, that could potentially open the floodgates. You're starting to see some concerns grow over softer economic data. We saw it again in this morning's CPI report. We saw stocks kind of roll over following that. And potentially that keeps the would-be buyers at bay, i.e. the funds. Now, cash does remain mostly strong. I think we were seeing 188 down in Texas, which is about $2 softer than last week. So we are starting to see the cash market come in a little bit. It'll be interesting to see if the cash market continues to come down to the futures market or if they can work together. Either way, I kind of am in the camp that the upside is probably going to be limited at this point. And the same can be said for the feeder cattle market. Here we've got the August contract pulled up here, and we're just kind of lingering near trendline support, which I guess is, from a risk-reward standpoint, is a decent opportunity to the buy side. But again, break and close below there, and there could be some air underneath the market, so that would be my concern. Now, on the hog side of things, boy, what a yo-yo of a market that has been. Limit down in the August contract yesterday. Now, because August was the only contract limit down, we did not have expanded limits. It was the 375 limits for today's trade. We did open lower, but had a nice rebound in today's trade. And the upside objective for anybody that wants to be long the market is this trendline resistance, the 20-day moving average, and the gap. And that all comes in near 88.5. If the market's able to get back out above that 88.5 level, potentially that spurs a little bit more of a relief rally going forward. And then lastly, I want to touch on gold and silver. We talked about that yesterday being on our radar as kind of the bright spot or potential bright spot in the commodity world. And we saw it today following the CPI report that was softer than expected. Gold back out above $2,400 with some conviction, and that opens the door for a potential retest of back to the contract highs near $2,475. Silver also looking very constructive. We do have more economic data out tomorrow morning, 7:30 a.m. Central, in the way of PPI. So again, expect some volatility there, but softer than expected data. I like these metals to the long side going forward. Knock on wood. So that's what we're looking at. Again, remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.